In this backtesting example, I took a loss, but was able to immediately get back into a winning trade using market structure, supply and demand, and pure price action analysis. And in this video, I'm going to break down step by step so we can understand the repeatable framework behind these type of trades. It was the alignment between higher time frame structure, internal order flow, and waiting for price to show me what it wanted to do and when that helped make for a great trade opportunity. That layer of patience and structure alignment changed the quality of the second trade I was able to take in this backtesting exercise. My name is Vi. I've been trading for a few years and I'm still on the journey towards profitability. My focus is mastering market structure, supply and demand, and price action to build real skills and eventually real financial freedom for myself and my family. If you're on the same path, then stick around. Let's sharpen our edge together. This is, as a reminder, this is for educational purposes only and not financial advice. With that said, let's jump in the chart. All right, so we are on the 15-minute chart for US CAD. We're looking at May of 2025. We're going to take these old trades off the board just to clear things up. And we're going to rewind back to the open of New York morning session, 8 o'clock. So the opening bell is at 9:30, but we're going to start our day at 8 o'clock. And we are currently bullish. As we can see, our order flow goes from this low to this high. And so we care about price action inside of this zone only. As we can see, we're pretty far down the current leg. And so what we want to look for at this point is some type of liquidity. We don't have any space, frankly, for a valid demand zone without triggering a change of characters. For example, we have a demand zone right down here, but if price were to come down here, we would likely close below this, initiating a change of character. And at that point, we're looking for shorts. So let's just ignore that for now and just look at the most immediate point of liquidity, which is this London low. What we want to see is a liquidation of that low and then see price action give us the signals to move towards higher prices. So we'll play price out. We do see a liquidation and an up candle here. So what we're going to do is we're going to jump in. What we see is at 8 o'clock immediately we liquidate London low and move aggressively up. The question is, do we take any significant supply zone? For me, the supply zone is all the way up here. The reason is because this fair value gap here denotes some aggressive action, which then takes this internal low here. It's actually the origin point of what eventually takes this, external low, let's call it, for the purposes of this view. And so that's what we're targeting. If price can go above this line, close above this line, then we are interested in taking a long. And so we'll play price out. We don't see anything quite yet. We get another aggressive move down, and that's fine. And then we actually end up liquidating, we actually end up closing below that original low. And so this tells us that we're looking at another demand zone that's pushing price up, and can it take over another supply zone? So for us, it's this supply zone right here for me, because that is the origin point of the selling pressure that took this low. So we want to see if price can break above that area. We wait, and eventually price breaks above. And that is our entry signal to take a long. And so what we'll do is we'll drop to the 5-minute to see where we could get an entry. We see that there's there's a fair value gap right there. So we'll take that as our entry. We'll put our stops at the low. 77 ticks. We'll set our take profit up here at this original supply zone here that pushed price aggressively down. and we'll use that as our trade setup for now. So we'll set up the trade for 1% of our risk, as always. And now we'll see what price does. Price moves out, but tags us in. And this is all before the 9:30 open. So as we get closer to the 9:30 open is when we want to observe, price. But what happens here is that price takes us out immediately. So we take a loss, okay? But if we look back, we see something interesting, and this is what we want to take for future, observation, is that we actually had pretty equal lows sitting up here. Yet, yes, these lows did sequentially kind of liquidate one another, but at the end of the day, when we zoom out, this is basically three equal lows and represents key liquidity. What happened is that price at 9 o'clock came in and took all the sell stops, including ours, that were there. And so that's what resulted in the loss here. The trade idea was valid, but there were circumstances that we should be mindful of in the future, like these equal lows. So that's fine. We took the loss, and now we're just kind of playing things out. The fact that a significant area of liquidity was taken tells us that there could be another opportunity to get into longs if we get our signals. And so what we're doing is waiting for that very signal. So for us, a demand zone that needs to be taken is all the way back here. If price can push further and close above that, then we are again interested in taking a long for 1%. And that's what we immediately get right here. We get a close at 9:16 to go long. And so what we're going to do is we're going to try and find an entry that makes sense. Again, we see here that we have a fair value gap. So we're going to target that fair value gap as our entry point and put our stops right above that low. And we're going to target the same highs, which gives us 3.4. And so we're going to put this trade back on. Now this takes a lot of mental fortitude to go back into a trade after taking a loss. But if we're confident in our entry signals and how we're reading price action, then this becomes a lot easier, is what I've found in back testing. Now, I've yet to kind of employ this type of discipline in real market trading, so it remains to be seen. As I take real trades and gain profits or losses, I'll be sure to post them here if there are learning opportunities to be given. But with that said, let's kind of tag into this exercise here. We're tagged into the trade, okay? Price comes back to enter that fair value gap that was left on the 5-minute chart, and we immediately start pushing up. We have one take profit, which is right down here at the present day New York high, which we hit. And now I'll take 50% off at this point, and you can argue that the loss that we just took earlier is pretty much made up. We move our stops to break even. This is me taking 50% off the table. And now we're trying to target that original take high, that take profit from above. Price pushes back aggressively. We are past the open at this point, which is good. So we want to be mindful that we are still bullish and price will want to go up is our hope and hypothesis here. Price continues chopping around a little bit, but does show us signs that it wants to continue higher. We continue pushing higher just about, we're almost there. And there we hit our take profit. And so that's how we can take a loss, but not let that shake us from our hypothesis and overall time narrative, and still get into a trade and still end up profitable for the day. I hope this video helped you understand a little bit more about how you can use supply, demand, market structure, and price action analysis to find winning trades. If it did and you'd like to see more, then check out this video right here to see another example of this very strategy, and I'll see you there.